Why rent the one tenant when you can have four? Seriously, think about it. Multifamily properties is real estate's equivalent to a power play in ice hockey. It's like leveling up from checkers to chess. You got more pieces to work with, more strategy to execute, and let's be honest, you got a lot more money to make. But here's the beauty of multifamily investing. You're not just buying one property, you're creating a mini income machine. Multiple tenants means multiple streams of income, multiple streams of cash flow, and that means you have more cushion, more stability, and more opportunities to grow. So whether you're just getting started or you've already dipped your toes into single-family rentals, this is probably your next step to take things up a notch. Guess what? It's not as intimidating as it sounds. So in this video, I'm going to break it all down for you. From why multifamily properties are the ultimate investment to how you can get started without breaking the bank, we're going to cover everything you need to know. So let's dive in and turn your real estate hustle into a real estate empire. My name is Bud Evans. I'm a retired military officer and former police officer. I retired in 2021 buying rental properties. Before we jump in, do me a favor, hit that like button, subscribe to the channel, and turn on your notification bell. It helps more people discover this content, and trust me, you're not going to want to miss what's coming next. So let's get to the point. Multifamily properties are the ultimate game changer in real estate, and here's why. When you invest in a single-family home, you're relying on one tenant to pay the rent. If they move out or they miss a payment, you're left scrambling to cover the mortgage. With multifamily properties, you got multiple tenants sharing the load. If one unit goes vacant, the others still generate income, and that keeps your cash flow steady. That's what I call a safety net. Plus, think about efficiency. With multifamily properties, you've got one roof, one property bill, and only one landscaping crew to manage. But instead of one tenant paying the rent, you've got two, three, or even more. It's like bundling your real estate expenses while maximizing your income. The math just makes sense. And let's not forget about appreciation. Multifamily properties usually see higher appreciation rates because the value isn't just tied to the market, it's tied to the income potential. So when you increase rents or you improve the property, you're not just boosting your cash flow, you're increasing the value of the property overall. And that's a win-win. But before you dive in, it's important that you know your options. Not all multifamily properties are created equal, and the type that you choose depends on your goals and your experience. I'm going to break this down into a few categories. First are duplexes. I want you to think of duplexes as training wheels in multifamily investing. They're small, they're manageable, and they're great for beginners. With just 2 units, you get a taste of managing multiple properties without feeling overwhelmed. Plus, they're perfect for house hacking. You live in one unit, you rent out the other, and you let your tenant cover most of the mortgage. Triplexes and quads. These properties are the sweet spots for most investors. With 3 to 4 units, you're still in residential real estate territory, which means you can use traditional financing options like FHA or VA loans should you decide to house hack. More units means more cash flow, but it's still manageable for someone who's just getting started. Small apartment buildings are the next step. So if you're ready to take it up a notch, small apartment buildings with 5 to 20 units falls under commercial real estate, so the financing is a bit different, but the income potential is larger. And these properties are great for investors who are just looking to scale. Now let's talk about large apartment complexes. This is the big league. Large complexes with 20 plus units require professional management, but they're a powerhouse for generating income, and you're swimming with the big sharks. If you're aiming to build an empire, this is where you're going to want to land eventually. Each type has its pros and cons, so let's start with what feels comfortable, and then we'll grow from there. All right, let's talk about money, because financing a multifamily property can feel like a pretty big hurdle, but it doesn't have to be. And here's how to make it work. If you're eyeing a duplex, triplex, or quad, guess what? You're in luck. These are still considered residential properties, which means you can qualify for traditional loans, FHA loans, which let you put as little as 3.5% down, and if you're a vet, a VA loan can get you in there with 0 down. Here's the kicker. You can live in one unit and rent out the others. House hacking gives you owner-occupant benefits while still generating rental income. Now, for properties with 5 or more units, you're going to need commercial financing. These loans are based on the property's income potential rather than your personal income, which can work in your favor if the numbers are strong. Yeah, the down payment is higher. It's usually in the 20 to 25% range, but the returns can be a lot higher as well. But don't overlook creative financing options like seller financing, partnerships, or hard money loans, or sometimes you can even assume the previous loan. The key here is to run the numbers. If the deal works, find a way to make it happen. All right, so how do you find that perfect multifamily property? Hey, what if I told you you could make thousands more a year by getting on the fast track to escaping the daily grind with one simple trick? So you know those finance gurus on TV, they're going to have you start by eliminating your daily latte. I say, enjoy the coffee, and let's work to eliminate something that's not so enjoyable. Your biggest expenses in life, taxes. Step 1 to doing that is setting up a business entity. Setting up the right type of business structure is going to do a few things for you. 1, it's going to allow you to pay a lot less in taxes. 2, it's going to protect you from liability associated with your business. 3, it can open doors to business funding and credit to support your marketing inventory and other business expenses. I'm introducing you to Prime Corporate Services. They're experts in helping our clients get structured the right way. You get a complimentary consultation with one of their experts to brainstorm ideas, and if it makes sense, they'll set up your business entity for you. Hey, bud, so what's the catch? Well, they know after they prove how good they are and how well they're going to take care of you, you're probably going to want to do more business with them in the future. That's it. It's the old show them how you can help them by actually helping them trick. I use Prime myself. They're going to take a look at your situation, take care of all the complex nuances of setting up a business, and make sure that you're structured the right way. So book a time now for your call so you can start keeping more of your hard-earned money. Book your call now. The link is in the description. It starts by knowing what you're looking for, as always. So research your markets. Look for areas with strong rental demand, low vacancy rates, and growing populations. If you're looking at gentrification, you're also going to look at neighborhoods near schools, hospitals, which tend to attract reliable tenants. Then set your criteria. Decide what you want in a property. How many units are you looking for? What's your target cash flow? Knowing what you want up front will save you time and keep you focused. Network, network, network. Use the right tools. Work with a real estate agent who specializes in multifamily properties or a commercial agent who specializes in apartment buildings. You're going to have access to deals and insights that you might not find on your own. Next, be patient. Good deals don't pop up every day. I'll get 30 deals across my desk. I won't look at any of them as serious. So take your time to analyze each property and wait for the one that checks all your boxes. Owning a multifamily property is one thing. Managing is another. The good news is, hey, you got a lot of options. If you're up for the challenge, self-managing can save you a ton of money. You'll handle the tenant screening, the maintenance, and rent collection all by yourself. Tools like property management software can make this easier than you think. Stessa.com, Doorloop, or even Apartments.com can help you out with that. If you'd rather not deal with the day-to-day grind, hire a property management company like me. I'll take care of everything for you for a fee. Now, mine's 8%, but it can go up to 12% of your rental income. This is a great option if you're managing a larger property and you want to free up your time for other investments. No matter which route you choose, communication is always key. Keep your tenants happy, and they're going to stick around longer, which reduces turnovers and keeps your cash flow steady without having to flip an apartment for $3,000 to $5,000. Once you've got one multifamily property under the belt, scaling becomes the name of the game, and here's how to do it smartly. Robert Kiyosaki said, "He's not rich because he's not in debt. He's rich because he leverages." So leverage. If your property is appreciated, cash out refinance to fund your next purchase. It's like letting your property pay for itself. Go bigger. Move from duplexes to quads or from small apartments to larger complexes. Each step brings up more income potential. Next, build your network. Connect with like investors, agents, and lenders. The more people you know, the more opportunities you're going to find. And finally, always keep learning. Real estate is an ever-evolving monster, so stay sharp, read books, take courses, and don't stop improving your game. At the end of the day, multifamily investing, it's about more than just cash flow. It's about building a legacy, creating financial freedom, and giving yourself options. Whether you want to retire early, spend more time with your family, or simply stop worrying about the money, multifamily properties can help you get there. Or simply stop worrying about money, multifamily properties can definitely help you get there. And remember, you don't have to do it all at once, and you don't have to do it alone. Start small, learn as you go, and keep building. Each property is a stepping stone to something bigger. Multifamily properties are the ultimate real estate power play, and they're within your reach. So whether you're just starting out or looking to level up, the tools and strategies are all there. So why settle for one tenant when you can have 4 or even 40? Take the leap, do the work, and watch your wealth grow. Let's make it happen. Until the next video, aim high. Are you a veteran or first responder and you're ready to start your journey into financial freedom through real estate investing? Visit budevans.com and sign up for a free strategy session today. Whether you're looking to wholesale or flip properties or do what I did and build a passive income portfolio, I'll help you create a customized plan to achieve your goals. Don't wait. Take action now and unlock your potential for success in real estate. Let's turn your dreams of financial freedom into reality. Head to budevans.com and schedule your strategy session now.